Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Good day, everyone. How you going? Thanks for joining us on the podcast today. If you've been tuning in for a few years, you know how much I love conversations, discussions, storytelling, learning from property investors right across Australia. And I've probably got one of the most fortunate jobs in Australia, if you think of it that way, in terms of enhancing my property knowledge and education as an investor myself, chatting to people who are in the game, doing it themselves. So I think it's a real privilege to be able to do what I do, and I do take a lot of responsibilities out of it. And hopefully as you tune in down these podcasts and join me as I try and engage in these conversations, you also learn from them. And that's what this podcast is all about. We're fortunate. I was actually sitting here late last night looking at reviews on the Smart Property Investment Show and what people are saying. And I'd like to report, I'm happy to report that by and large, everyone is pretty satisfied with the stuff that we're communicating via the Smart Property Investment Show. There's also some stuff, some constructive criticisms in the reviews that I see, and I do take that on board. One of them is about getting more investors back on the show and telling their stories, and that's what I love doing first and foremost. So if that sounds like you and you want to come on and have a chat with us, irrespective of where you are, what you're doing, your background, how many properties you've got, it's largely irrelevant. If you invest in property and you love investment property, you want to share your stories, I'd love to have you on the podcast. So make sure you email the team, editor@smartpropertyinvestment.com.au. We'll get you on the show. You can have a chat and we'll work out how we go. And if you've been tuning in for a while, you'd probably hope and understand that these shows are completely unscripted. I get a small brief in front of me before I meet with any guest, and I like to use it as an opportunity to organically find out about people and get them to share their story. And I like to be inquisitive myself, so I make sure I don't have too many preset questions, or I sort of know what I want to talk about, but I don't make it scripted. Our guest in the studio today is a guy by the name of Krys Drysdale. He's a real estate agent. I'm not going to hold that against him. They do some good work. I'm sure we'll get into that. But I have some notes though, and I don't normally sort of approach a podcast this way, but I thought I'd read it out. And Krys actually contacted us with this particular story, and I thought I'd read it out, and it sort of set the tone for how we go about this conversation today. But before I do that, Krys, how you going, mate? Thanks for coming on.
Yeah, good. Thanks for having me, Phil.
It's good, mate. So you write, Krys, and this is an email you sent through to the team. My wife and I only started investing a year ago, really. I'm 43 years old, living in Sydney, and frustrated with the idea of trying to own a house in Sydney, brackets, and feeling like I'm desperately running out of time. Well, you're not that old. We're about the same age, mate, so you've got plenty of time.
Nice, thanks, mate.
Don't worry about it. As you see, I am a real estate agent and sell property mainly in Ryde, West Ryde, Putney, and Denison areas. And for those people not in Sydney, they're sort of 10 Ks outside of the CBD, is about right, Krys? Yeah. Good areas. West Ryde, for example, Ryde, Putney, they've done really well recently. Huge growth, and so obviously some quite significant declines recently, but we'll have a chat about that. Krys, you continue to write, we've gone the route of rent where we want to live, Neutral Bay, and invest in the future, invest in property for future retirement. Again, not that similar. I just live down the road from you. I rent as well. I have a different mindset than the norm. I don't buy properties with owner-occupier appeal generally, as I never want to sell my properties, I guess, and never want to own my own home. Okay, good talking point. This idea has come out of meeting a lot of old people who are asset-rich and cash-poor, but yet too old to enjoy it, and there is time to run out. The idea that the house owns them now and not the other way around, this is usually accompanied with a fear of losing the pension. Okay, another complicated thing, but you're really thinking down the path, aren't you, with this, which is good. Right. Current portfolio, 6 rental incomes, unit block of 4 units, unstrata, which we purchased in Queensland, 1 street from the water. This is zone 21 metres, and I know I can build 10 units on this site. It's probably in Deception Bay or somewhere around there, is it?
Woody Point.
Okay, there we go.
Pretty much.
You got a duplex in Toowoomba with the ability to build a third on the back. Next purchase and goals, unit in Sydney, 2-bedroom and an old walk-up, low stratas. Duplex with the ability to build 2 more on the block, turn into a villa site, 4 villas with the ability to develop 4 more on the block, and develop my own unit block into 10 units. Okay. You've thought a lot about this, haven't you? Mm-hmm. You sort of know where you're going.
Yeah, absolutely.
Which is cool. Do you know where you're going?
Yeah.
Yeah? How'd you work that out?
I guess it was more just about what I can do, what I can develop on that I can buy, right? So I stared away from I'm staring away from the high price properties that would give me substantial growth in the area necessarily at this point in time in my portfolio, because holding them in the current market with the rental yields is it's hard. So,
okay.
Yeah. So I'm trying for more of a yield play at this point in time.
That's cool.
With things that I can add on to later.
So Are you a property investor or are you a real estate agent? What first?
I don't know. That's a tough one, really.
Yeah.
I guess in my personal life, I'm an investor, but my career is a
Real estate.
Real estate
So a real estate agent gives you the utility to be able to invest in property and provide for long-term wealth creation, I guess.
That's exactly right.
Okay, that's cool. So that helps sort of dictate the way in which you approach property investment, your goal setting. And as I said, we're about the same age pretty much of the year. I have a very similar mindset to you. What can I do now? We're not old, we're not young. What can we do now to actually capitalise on the markets, our capacity to earn income, translate that into long-term wealth creation, right? That's sort of how I see the world, and it sounds like that's our headspace is probably quite similar, and you're already down the path. You've got some good assets, you're underway. What's the sort of the future look like for you once you sort of stop being a real estate agent and choose to be something else, and whatever that is, I don't know. But, your retirement plan, you're looking to hang up the boots at some point and sit back and relax, or do you think you're always got to be hustling and working, doing what you do? And, why are you investing in property?
I'm investing in property specifically to obviously replace my income, and like everyone who comes on your show pretty much says the same thing. They're looking to build wealth and to be able to retire with an income. Okay, that's pretty much what I'm doing. However, I don't think I'll leave real estate. Even if I can get a good income from my assets, I'll continue to keep doing this. And I feel like in a way I'm actually doing it to help people, to progress with their life and to progress with their path. And that's what I enjoy about real estate so much. Some of us have been tainted with bad names in the past. I mean, I get called a one notch above a used car salesman and one notch below a politician. So it's
not very fair, is it?
Not at all. But I feel like I'm just helping people progress with their lives, and it is rewarding in that way.
I'm probably one of the biggest vocal advocates of real estate agents in Australia.
Nice.
Always try
Thank you.
and bang on about them, and I couldn't imagine trying to sell a property myself, or even buying a property directly with an owner who's got its own headaches. So a huge advocate of real estate. You guys have got a bit tough at the moment. Like markets are changing, particularly in Sydney and Melbourne, and we could probably touch on it at the back end. But as a wealth creation strategy in property investment, is there any particular any reason why you've chosen property as the tool to translate your time and your effort in terms of generating income in your job? It happens to be real estate. Doesn't really matter what you're doing. Why have you chosen property as the asset class for you?
Well, I'm no good at shares. That's
I don't think anyone's good at shares.
But I mean, I guess it all started when I read the book Rich Dad Poor Dad. Okay. A lot of people put it down to that book, but I also read all of his books. So I read Cash Flow Quadrant, Rich Dad Investing, and all that sort of stuff. And I guess it was just an asset that I'm passionate about. I love it, and it's easy to see. It's a tangible asset. You can see it, you can touch it, and it produces income, and you can change that income by pulling certain strings, I guess, by manufacturing equity, and if it's finding ways to add value to it.
That's the way you go. And what was your first foray into property business? How long have you been doing this for? Tell me about your first purchase.
Okay, so my first purchase was in Clontarf, actually, in Queensland, and that was the worst purchase I've ever done, the worst decision I've ever made. It was I paid $425,000 for it at the peak of the market. Okay. We had first home buyers grants back then, and my wife and I, we purchased that, fell in love with it. It was a divided block already, so it was skinny and long, and it was just a little wooden home on this block, and we got stitched up.
Was that to live there?
Yeah.
Okay.
Yeah.
So are you a Brizzy boy, are you?
No, I just moved back there for work at some point, met my wife, and then we came back here a while ago. So, and it was terrible. The real estate agents stitched us up on the sale and basically made sure they got everything out of us possible because we were emotionally invested into that home. And
is that how did that happen? Like, did you just see you guys and went, okay, here we go?
Yeah, and we just absolutely fell in love with it. And I mean, if I knew what I know now and going for it, I certainly would have ran from it.
So you paid over. Is that what you just paid too much for it? Is that pretty much how you got
easily over it by probably about $40,000?
Well, okay.
Yeah. All right. And a $425,000 house, that was a lot. And then moving on 6 years, we owned it for it, and we didn't live there for 6 years. We only lived in it for 12 months, and then we were both working in Brisbane City at that time. And when we actually moved, so we moved out of it after 12 months, and then we moved to Sydney shortly after that. So we just rented it out for a while. I was then made redundant from mining, and called up the real estate agent and said, I've been made redundant, I've got to sell the house. And
Same bloke you bought it off?
No, different guy, and he was just rubbing his hands together with glee. And and then I got stitched up on the sales.
What, he just sold it too cheaply?
Yeah, he didn't bother trying really. He just knew that I had to sell it, or felt that I had to sell it. Unfortunately, now though, in hindsight, I didn't really need to sell it at all. Everything was fine. It was just a panic sale.
Hindsight, as in the benefit of education and knowledge.
Yeah,
you could have held on to it
easily. Yeah, easily.
So you bought it for what, $430?
Yeah, $425, and I sold it for $430.
Okay,
6 years later.
So $5,000.
Yeah.
How much did the mortgage cost you to hold over that period? Were you P&I or were you?
Yeah, P&I, but it actually went cash flow positive, so I wasn't out of pocket or anything.
Yeah.
I just thought, I just don't want this hanging over my head. I think interest rates, we were worried that they were going to go up at that point, and it was just bad. Just
So whose fault is it? Yours?
Mine. Yeah, completely mine.
Yeah. And if you had your time again, what would you do?
I just hold it. We had a bit of money in the bank. It wasn't like we were panicking or anything. I just worried, so I just thought I'd sell it. It's just a panic sale.
Which is great for property investors, right? I love a panic sale.
Yeah,
that's when you're on the other side is when you pick stuff up for good value, right? So did you? You've got a bit of scar tissue now. So were you tapped out for a while? Did you go stuff this property like I don't want anything to do with it?
Yeah. Well, we actually. We actually put, because it was our principal place of residence, we actually put money into it. So we paid down the debt a bit.
Okay.
So that's why it was cash flow positive. So when we sold it, we pulled out a bit, and then we actually used that to buy. We just held it in our bank for a number of years before, and obviously we were trying to buy in Sydney at that point, and couldn't find anywhere. So that was the FOMO time of Sydney.
Everyone was in there.
Yeah. And
so when you sold, how much, like what sort of cash did you have after? Because you paid down the debt during that period. Were you repeatedly paying down the debt every month, trying to drive the mortgage down as a matter of principle?
We didn't understand the principles of investing at all. So we didn't realise that you don't necessarily want to pay down a debt at all on a investment property. If you can hold it that way, you just really sort of wait for it to go up a little bit, bring out the equity.
Go that way.
I can't say that because actually right now I'm paying down a mortgage with principal and interest on one of my investments.
Okay.
So
we'll get to the now, but how long were you, so once you sold your place in Clontarf in Brizzy, how long were you out for? Like just not in the game?
So so in Sydney we were just every weekend looking for properties. I had obviously found another job and we were fine, and I just remember back in those, it was probably about 3 years ago now, just going to opens, trying to get a property, and just every week it was like properties were going up $100,000 every week, and we just thought, this is ridiculous. We literally, I think we could afford from a bank mortgage perspective about $1 million, and we just
couldn't get something.
Just didn't want to do that.
Yeah.
Just didn't want to get in that much debt, and just didn't want to do it. And for a 2-bedroom unit or
was this buying for the purpose of investing or
no? This is for owner
occupier.
Yeah, at this stage.
Yeah.
And then we sat down and did some pros and cons and realised that, well, let's give investing a go. And I was starting to get into real estate quite heavily back then. And it just changed the way I thought completely about property. So
was it the paradigm working in real estate that changed the way you viewed it? So how'd you fall into real? And it's important. The fact that you work in real estate is largely relevant for the story, but as we said, it's a utility vehicle for you to create income, to create wealth. But how did you fall into, what's the backstory of falling into real estate?
I have a mate who owned a real estate agency, and that and just saw what he was doing and just thought, well, I can do that. So
is this about 2015, 20?
About then, yeah.
Okay.
Yeah.
It's pretty easy to sell a house back then.
Yeah. And just thought, well, it's something I've always wanted to do. I love property, and I found trying to buy a property uneducated a really hard thing to do. It's different now. Obviously, I know what to do, what to look for, and everything in regards to property. But without a buyer's agent at all back then, it was just confusing. The whole process was confusing. It was hard. How do you know if you're overpaying? Sort of.
So you use a buyer's agent and find your stuff now?
I don't, but if I wasn't in real estate, I would.
You would do.
Absolutely.
So what are the secrets then you've drawn from your experience being a real estate agent that makes you a better property investor?
It's just research and understanding.
This is the hard work, right?
Yeah, and just understanding what the true market value is of a property and just finding that out. Yeah.
Have you been buying property in the areas where you're marketing and selling property, or is it
Not
outside
at
of
all,
that? So
no.
tell us about the portfolio now then.
Okay, so the first one we bought was in Woody Point in Queensland, so
Okay.
up near Redcliffe,
Yep.
if you will. And Moreton Bay Council has changed the zoning on a few of those sites around there, or a few of those little pockets around there, to 21 metres high. So I just knew I just wanted to get a unit block that was or flats. All right.
So your first investment after your first foray into property investment was a block of flats.
yeah,
It's quite an ambitious move.
yeah. I didn't want to waste time, so.
And did someone help you sort of filter the marketplace and appreciate that was your strategy to go buy a block, or was it an opportunistic sale, or how structured was it?
No, I just I did my research. I would have been looking for a year for that. So I just did my research. I saw that come up, but about the property, it was way overpriced, and it had been on for a little while, and I knew it was overpriced. And I had conversations with the real estate agent. And the real estate agent was complaining to me about how other agents had walked in there and told the owner a price that they could get, which some real estate agents do. And then he obviously got the listing and was stuck trying to sell this property.
Perfect.
So I went in. It was offers over $999. Okay, so I went in and said, okay, did all my due diligence on the property and researched it, obviously the rental income, where it's at, and then I put an offer in of $870. And obviously that was rejected, but it had been on the market for a little, not too long. I think it was about 40 days. But they'd had no offers, no one come through. It was pretty bad. But I knew it was a really good property. It had been fully renovated since she had owned it. It's probably
Externally or internally?
both.
Or both?
Yeah,
Okay.
both. Okay. So it's 4 2-bedroom units, and each one's giving in anywhere between $275 and $300 a week.
It's pretty good.
Yeah. So I went, obviously I put through my offer. I then got it for $900. Then that was, obviously they accepted it. They tried to back out halfway through the deal because she had second thoughts. But that's the great thing about purchasing in Queensland.
Yeah.
You lock it in with your deposit. Went through to council and made sure I got basically approval on the, not a DA, but a box drawing approval from a town planner. For 10 units, and there was a DA around the corner on a smaller block for 10 units, so I knew I could do it.
So you've bought the block on the basis that at a point in time you'll knock it down and build 10 units up to, it was 21 metres, I think you said.
Yeah, it was 21 metres, yeah.
Okay, so you've bought for a purpose. So as an asset today, it works, it stacks up?
Yeah, it's great, yeah.
And for tomorrow, even if you do that yourself or if you on-sell it to someone else, they've got the opportunity to
That's right, yeah.
sell as
I'd probably get a
development block.
DA on it if I was going to sell it, but I wouldn't sell it. My wife and I would just love it. So.
That's cool. And it's only walking distance to the water, block away from the water.
Yeah,
isn't it?
it's 1 street away from the water. It's near Belvedere Hotel, which is, if you've ever been there, that's a pretty nice little bar area.
Sounds like you do all right with that thing then.
Yeah.
What sort of valuation would you get on today, do you reckon?
I don't know.
No idea.
Yeah,
Doesn't matter.
I only bought it in May of last year, so
Okay.
it's probably about the same, I'd guess. Maybe if they've gone up a little bit.
How big is the sort of square meterage of the land? Is it pretty big?
It's just under 600, so it's not huge, but it's a corner block.
Okay.
So, yeah.
Wow.
So I do have setbacks on the roadside, but
yeah.
it's still enough to be able to build 10 there. So
Okay. And are you planning for a development at some point, or are you just happy just to...
I'm just going to sit on it. And,
Okay.
Yeah, I'm happy.
It's like
with
a land bank really with upside potential.
think so, yeah.
And some income.
Yeah.
Yeah. So you paid $900 for 4 units.
Four units.
Or reno, so you haven't had to spend much on it.
No, I had to get the roof fixed, and
Okay.
that was about it, really. So
it's not hungry in terms of, ongoing. You chuck funds into it all the time. It's pretty self-sufficient.
So completely, she fully the owner before me actually fully renovated it. She would have spent $250 on it. It was an absolute dive when she bought it. She paid $400 for it. And
Okay.
Fix it up.
$400,000 for 4. You just sit there and mind boggle. Yeah. Was it like a red brick, or was it red brick?
It's not red brick at all. It's where they put chicken wire over it, cement it, and then paint it and make it look
okay.
Yeah,
so
yeah.
sort of okay.
But it's pretty impressive. It's quite a big. It's quite big for 4 units.
So you're quite happy with the purchase? You think you've done well?
I do. Yeah, I love it. Yeah.
You stress testing against your sort of mates going, I'm thinking about doing this. What do you think? How did you sort of, you were part of your due diligence, which you spoke about. It's probably good chance to actually talk about. What did you actually do to work out whether or not this was a sound investment? You check with council to make sure you could, the zoning, etc. But what else did you do?
So obviously you go through comparables. I mean, the hard part about purchasing something like this is comparables on 4 units. It's hard, but it obviously also gets when you go for the loan, they do the bank val does a val on it, but it's a commercial val, which was on it. And I just researched the unit prices there, researched the rental income, and I guess I got access to Price Finder, RP data, all that sort of stuff.
So the skills you would have used to value up a home for someone that you're selling, a vendor, you just use the same things to actually price it at the right point.
Yeah.
So understand and appreciate the long-term asset value with over time or the options that you have in order to do something. But for the here and now, whether or not it was a good buy.
Yeah.
Yeah.
I think I did okay.
Well, it's talking 10 years, I reckon.
Yeah, that's it.
You'll be driving up there in your Ferrari, you'll be right, but one can only hope. So what happened after that? What was the next sort of buy?
Okay, so the next buy after that was actually a super purchase, self-managed super fund. So I being in the industry, I'd heard through the grapevine that obviously Labor want to get rid of self-managed super funds purchasing, but I also knew the banks were pulling out of it. I even heard you mention it, that you were going to find out, but I just don't know if you found out the reasons why. But I kind of did my own research on it anyway. I jumped into that. It's funny. I only had 150 grand in my super fund at the time, because through the 2008 GFC, this is what really prompted me to do this. Was my super fund was a good amount.
Yeah, we've been working in mining, right? I'm sure you'll get a good earn.
And then 2008, my super fund went to half.
Okay.
And my wife's 10 years younger than me, so she was getting into her work around about that time and started working hard in her career.
So you saw the value get stripped out of your super fund because it was all invested in. What was it, like an industry fund?
Yeah, Australian super.
Okay.
Yeah. Stripped to half. And then when my wife got into work, she started working at her day job as a career, and she had 10 grand more than me. Yeah. There's 10 years difference there, right? So I thought something's not right here. So obviously now being in property, I decided to pull that money out, created some, obviously my required trust account and did all that sort of stuff, and purchased a duplex in Toowoomba. So. Okay.
And I've been doing a bit of work on, I've got a super fund, but I have nothing in it. I set it up on the basis of buying property. I haven't got around to do anything with it, right? I've still got my super and my wife's super sitting. We've got 2 different funds, and I can't remember. Mine's with BT, right? I think I've spoken about it before. A couple of years ago, a horrible return of 0.1%, right? I remember complaining about this, but so I set up a super fund to do something with it. I haven't done anything with it, but we're doing a bit of work here at the sort of the corporate business recently, and I'd sort of lost a bit of touch with sort of self-managed super, and for our listeners, just to give you some idea, in terms of percentages, I think there's like 30, maybe 36%, which is the biggest individual percentage, the minority percent of super money sits in self-managed super funds. So it's bigger. So the money sitting in self-managed super funds is bigger than retail funds and industry funds and everyone else. And I sat there, I knew it was bigger, and I went, shit. I'd sort of lost a bit of touch with just how big super, self-managed super was. I think there's $600 or $700 billion of super money sits with it, of the 1 point something trillion in superannuation. So more money sits in people's self-managed super fund as a percentage than retail funds and industry funds, which is huge. 600,000 trustees, everything. It's just like the actual value of. So a lot of people own property in their super fund, and Labor's looking to change the status quo around that.
Well, they may need to get access to it at some point, right?
Well, maybe, like they need this money to actually build roads and stuff. They borrow it off the super funds, but it's harder to get lending. Like a lot of lenders pulled out of super. So who did you fund your property through in Toowoomba?
So I went through Latrobe.
Okay. Yeah. Latrobe's still pretty good in this regard. I think they are. I need to check. It's still pretty good in this regard. So has it been a good experience investing in your super fund?
Yeah, it's a nightmare getting it set up. I had to go to a solicitor, and they had to read back to me creating my trust accounts, and actually going into a contract with Latrobe. And it's but they've been great. I have, they just take their money out, and I get my rent, and
happy days.
Yeah, haven't had any bad problems with them at all. They're great. Yeah.
So your second purchase outside of the block was in your super fund. What's happened subsequent to that? I read it out originally, but tell us where you're at with it all. After the super fund purchase, what's where you at with?
Okay, so the next one now is my wife and I are looking at purchasing a unit with her super fund money.
Okay.
So although I'm not really that big on just buying separate units. Yeah, that's right.
In Sydney?
Yeah.
Okay. You're like a two-bedder, I think you mentioned that.
Yeah, just looking for I think it's just an old two-bedder walk-up,
Yeah.
that you can buy. So.
Have you got your sort of real estate mates saying, hey, look, if you see anything good and any sort of distressed sellers, give me a call?
No, not really. I
No.
talked to a couple of the guys at work, but I just sort of keep my...
Keep your own counsel,
Yeah,
go and do your own thing.
Yeah, not everyone agrees with this method and way of doing it, especially in real estate. It's pretty big to buy your own home, settle down for 30 years and pay it off. So,
and I don't think a lot of those people actually listen to this podcast, but it's still the norm, right? I tune into, obviously involved in this podcast, but I listen to other property podcasts, and when you look at the stats, I think there's only a handful of people. It's a small percentage of people actually own more than 2 investment properties, right?
That's right.
And so if you're one of those people, you're quite a unique beast. You might think and you might hang around, or your peer group or your friendship group might be other property investors. So you think everyone else is doing what you're doing. It's not the way it is, right?
Yeah.
It's just not the way it is. It's only a handful of people, a handful of Australians own a lot of investment property. You know, so to have that mindset to actually go out there and go, you know what, I'm going to take control of my own wealth creation and do something about it, rather than sitting around and give my money to a retail fund and hopefully that's going to be my retirement, give me $20,000 or $30,000 a year. I don't want to be one of those people. I don't want to be one of those people. So you enjoying the journey, investing in property?
Yeah, I love it. It's very addictive. All of a sudden, you just want to hurry up and get the next one and the next one. But at the moment, I'm on hold. So,
are you on hold purely because of can't get lending? On hold because the market's out? What's sort of stopping you from doing more?
More so, my wife and I are looking at family and that sort of stuff. So we're just sort of moving down that path. It's just hold. Let's just see how we go.
And I don't think if you're investing in Sydney, you don't need to rush.
Yeah.
At the moment, we've been talking about a lot. And you operate
six to 8 years. I think we've got.
I think you do. You operate sort of Putney, Ryde, West Ryde, Denison areas.
More West Ryde.
So it's all sort of like around Macquarie University, right? That's pretty much your beat.
Yep.
You guys have probably copped it more than anywhere else. In softening of values, and a lot of it is because of a lot of unit builds and stuff, and I think there's a bit of oversupply. What's driving the market out your way, sort of downwards? Is there any main reason? Yeah,
so it's down about between 16 and 17%, especially in West Ryde. Ryde, it's a little bit less. Putney, it's about 16%. So it is down. I guess from what I can see, significantly there were a lot of Chinese buyers around our area, and they had a lot of money at that time, and that was sort of, they were just buying, and that just pushed up the price.
Is there much stock on market, or is it pretty hard to get listings?
No, it's I think I've got about 8 at the moment.
Okay.
And just it's just owners' expectations at the moment are just still a bit above the market. So
to give some science into that as a property investor, and through your experience selling properties on behalf of vendors, how do you smell a distressed sort of vendor as a property investor, so you can look to get a more
give that information out.
Get a more advantage price. How do you know? What would you look for in a buying cycle to know you're getting a good deal?
I guess if I was going to look myself to purchase a property, I'd be looking for a property that's been on the market for a little while. But you've just got to make sure there's nothing wrong with that property or the reason. Obviously, if it's been on the while, it's generally the vendor's expectations are above the market. But I think it's been mentioned here before. I would just come in with low offers, and just sort of see how you go from there.
How do you know when a real estate agent's really desperate and hanging out for the next sale? What's the telltale signs? Give us something.
I don't know if real estate agents are desperate. I don't know. I'd just make sure that, put in low offers and see where you go. And, it really just comes down to where you see value. If you see value at a certain price and that's when what you're happy to pay, either pay it or be prepared to walk away. Yeah.
And have you deviated at all from the long-term vision through wealth creation in property over your years now working as a real estate agent or as a property investor? Do you ever sort of lose sight or have lost course at all? Or how do you stay on course? How do you make sure you keep consistent?
Yeah, I guess that's interesting and a good question. So I guess where I come from, I deal with a lot of emotional buyers who are buying a house to live in and pay it down and do that sort of thing. And it's I've got to be careful not to voice my personal opinion, which is related more across the whole. I'd rather rent where I live and just buy assets and build a portfolio. I'm only recently in that though. I mean, in the last sort of 5 years, I guess, or even less than that, have had that mindset. And that really came a lot from, I never forget, there's one property that I was trying to sell, and she was a little old lady, been in there all her life. She was, her husband had passed away long ago, and she just couldn't leave the house. She just couldn't leave the house.
That emotionally connected and attached to the house.
Yeah, and just that came from my comment where the house now owns her. It's not, and didn't want to lose her pension. Yet she was sitting on a $1.5 million asset.
So she thought she sold a pension. That means the asset test would mean that she's got too money. She wouldn't have a pension.
That's
anymore.
right. Yeah, and just didn't want to lose that. I mean, obviously we've gone through that. She's she can use that money to then purchase her retirement home or whatever it may be, but she just didn't want to. It's not my job to force people out of homes, right? So, but it's just when you see that, you think, oh, I don't want to be like that. I don't want to live in the same house be stuck in one address.
You say that now. You're talking about starting family and stuff, mate.
But
you might change your stripes pretty quickly.
Maybe
you never know, right? But but I'm all for like I live in New York, right? I live in a nice joint. But as an investment, it's not a high performing. I wouldn't want to own it. But it's a great place to live.
I mean, what am I paying? My property that I'm staying at would be probably 1.8.
Yeah, maybe
a little bit less now, and I'm paying $750 a week.
Yeah, it's pretty good.
Why would I want to buy something like that?
And the mindset of that is that you're earning money, you're making money, you're saving money. You put that to good use.
Yep.
Do you put it in the place you want to live and pay it down and pay the debt down, and you get a bit of security around that, I guess, is probably typically what the connection is. Or do you put that somewhere else, deploy that asset, as in that money, that deposit, into something which is going to double in yield or double in value, right? Like, if you can, the speed to build that up, and at a point in time when you want to live in your own joint, if you can always liquidate and raise those funds,
That's
right?
right,
Which is strategies that some people use. But, so is it pretty good these days waking up being a real estate agent? You're as hungry as ever before in this market?
Contrary to popular belief, it is a lot of hard work. So, generally we're up at 5 at the gym, at work at 8, and we work hours. We work 12, 14-hour days, generally 6 days a week. And
you guys work hard. You're part of this 5 a.m. club.
Yeah, that's right. Tom Panos thing.
Have you done his stuff, Tom?
I have done his course. Yeah.
Good man, Tom.
He's good. Yeah, so.
I don't know about getting up at 5 o'clock every morning, but it's but I'm very familiar with how real estate agents operate, and I think a lot of people to be a good performing real estate agent. There's a lot of non-performing real estate agents aren't real estate agents anymore, but
not in my office. I've joined an office.
They're all hungry, good operators.
And we all work.
Who are you with? Which brand?
Bell Property.
Okay, it's a good firm.
Yeah, we've just got really good, company. We're just really good. We're all mates. We're all a good team, and we all work hard. Yeah.
So going back to the mindset though of being a high performing real estate agent and what property investors maybe can learn from that, it's just about routine and diligence and doing what needs to be done, even though you might not want to do it, right? It's just, as Tom Panos said, right? Routine will set you free, right?
That's
so it's one of these things, you guys are up in the morning, you exercise, get your exercise out of the way, program your brain in the right way so you can be most effective at work, and you actually allocate times in your days to do particular tasks when you're best geared to do those tasks.
That's right,
so you might be on the phone in the morning.
Yeah, prospect in the morning.
You might do other stuff. So
meetings in the afternoon.
Yeah. Yep. And do you see that sort of translating into the way you can focus or give a drive or tenacity or the way you're sculpting your property investment journey? Do you sort of draw on some of those skills, do you think?
No, not really. I really just, it's just the ability to be able to research. I think research properties.
Just go hard.
Yeah, but it takes time. I think researching a property, that's for sure. So I'll probably spend a month in a suburb at least trying to figure out if that's a good suburb or not.
Okay.
I'm sure a buyer's agent. I've got buyer's agents mates, so they help me out as well.
So you're looking to buy a two-bedder now in your wife's super?
Yes, wife's super, yeah.
Whereabouts? Can you give us what do you like? You're spending time all over the joint? Yeah.
The problem with it is you're really restricted to the rental income versus the purchase price. It's not like you can just pitch in another 10 grand and then you can borrow more money. They don't let you do that. If, let's say, you go to purchase a property you're looking at 500,000, but the property wants 550, you can't just put a little bit more into the loan. You've got to actually put in 50 grand more.
Yeah.
So it's really hard. It's not something that's easy.
There's a balance at the
especially because we've only got a 150 or 160 grand to be able to do it with.
Yeah. So if we get together in a year's time, what do you think we'll be talking about? Where are you going to be at with with your property investment journey? Hopefully get at least one done in the super. But
I'll definitely get another one done. The next one I want to buy will be, I probably just want to buy 2 or 3, or even a duplex.
Okay.
With the ability to be able to build 2 more on the back.
In Sydney?
No.
Okay.
Wherever it will probably be, I'm thinking maybe Melbourne, Victoria, something like that.
Okay.
So, yeah, maybe Adelaide.
Cool.
So, I don't know. I haven't yet to research that, but
watch this space.
That's
Good
it.
one, Krys. I've really enjoyed the chat.
Yeah.
You know, I've gone a bit longer than what I normally would, but
Nice.
you know, it's so you listen to the podcast. How do you normally sort of digest the podcast? Are you sort of a driver guy and tune in? Or?
Sometimes you're more my gym workout,
okay,
buddy.
I've heard a bit about that. You know, maybe I could start yelling and screaming to do some more reps down that line. But or we could do this on a treadmill or something. Maybe the way to go.
Yeah.
But no, look, happy. I'm really pleased you come on, mate. And
thank you.
And you know, to bookend my chat when I started the podcast. If you want to come on, please do. You know, we love having investors from all over the place, in particularly female investors. Please give us a call because we want to get more girls on the show. Men and women, Mars and Venus, see the world a different way. So I'd really like to start sharing a lot more of your story. So can you please contact the team, editor at smartpropertyinvestment.com.au. And Krys, it's pretty easy, isn't it, coming on? You know,
Yeah, very easy.
It's just very easy.
Yep.
Just chat and, you know, it's a good thing with this show is that, you know, there's a lot of people listening to it these days. So there's quite a large community connected in with the Smart Property Investment Show, and we've all got the same agenda, and that is to make sure that people are more informed to make better property investment decisions. And if we can help doing that, that's really cool. So guys like Krys come on and share their story. Happy you've picked something up from that, and I definitely have. So, you know, I do appreciate your time, mate.
Thank you.
Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so you're the first to know what's happening in property and property investment, smartpropertyinvestment.com.au/subscribe. And there's going to be some cool stuff coming out. We've got some courses or events coming up around investing in property through one of our products here at Momentum Media called Nest Egg. It's all about wealth creation. So I'll let you know more about that when I know more information, but just a bit of an FYI, we're going to be doing some live stuff, which I think you probably really appreciate coming on and learning from. I'm pretty pumped about going to it myself. So if you're on social media and that's how you like to get your info, just search Smart Property HQ, track us down. If you like what we're doing with these podcasts, just press the subscribe button wherever you're listening to it, and you can make sure you get every episode as we release it. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.